Well, another top-down analysis, huh? Let's get it. So today I will do this analysis as I'm teaching a baby how to do a top-down analysis. That's it. Let's get started. Let's see. So first of all, we start on higher time frames. We're starting on the monthly time frame, then we go on to weekly, then we go on to daily. Thereafter, after finding our bias off of those three time frames, we go down 4 hour or 1 hour to find our narrative. After getting our narrative, there is where we build our context, waiting for an opportunity of a 15-minute time frame or 5-minute time frame, and that's it. Let's get started. So in finding my bias, I only look for two things. First is candle science, second is direction through that candle science. So what's candle science? Here's a simple concept in hindsight, the meaning of candle science. Okay, so let's say, oh shit, oh, what am I doing? Just a minute. Okay, so start a new one. So let's say we want to anticipate the next month, right? We don't know what the next month will be. So through candle science, it just says using the current candle and its previous candle, we can get to understand the next candle's intention or direction. How? Look at this. So the current month just closed above its previous month. So the anticipation is for the next month is to be bullish. Why? Because the previous month shows an intention of continuing high. So if we are bullish on the next month, where is our point of interest? Our point of interest is this swing point right there. That's it. So the next anticipation of the month direction is bullish. So if we pray that candle, what do I pray? What the hell? Ah, shit. I don't know what I'm doing though. So yeah, here is EURUSD. So praying the next month is boom. What's the next month candle? Yep, we can tell we are bullish our current month and boom, we reached our target. That's it. That's a simple way of understanding candle science, right? Said that though, I don't want to say that. So that's it. Candle science, just using two candles to understand the intention of another of the new created candle's direction. Let's get it. So through that concept, you can tell if we were bearish on this candle, let's say this and this candle, we're using these two candles. If I just check previous month's candle of this candle is bearish, then especially for the next candle is bearish. So that's it. That's the easiest concept of candle science. Okay, on this current version, here is where we get into a 50-50 scenario. If you look closely, we use that candle science concept. You look closely, this month closed above its previous month. You can tell, right? The body just closed above that. But we can see a rejection off of this swing point like here. That means price is bullish, right? According to candle science. But price has respected swing point. Then this gives us a 50-50 scenario, meaning that we are bullish, but also we are bearish. That's a 50-50 scenario. So that means it doesn't mean that we don't look for entries or trades for the next month. We do look for those entries, but we just need to lower our risk because we are in 50-50 scenario or 50-50 mode. That's it. So let's go down time frame. Arguably, what's our bias on monthly? So I would argue on monthly we are 50-50. Why? Because our candle science concept shows us we are bullish, but also we have respected the swing point right there, meaning that we have swept liquidity. And that's it. Easier. So that's 50-50 on monthly. We go down time frame weekly. So on weekly looks nice. On weekly looks nice. So on weekly, we can tell that we have swept that swing point like there, swing high like there, means that we have respected the swing point. What's next? The next point is, or the next direction is bearish. Why? Because we have shown the intention of reversing. We were bullish, then we are reversing. This can be seen through this candle right here. So through this candle, if we go deep onto this candle, we see something called a sharp turn. A sharp turn means imbalance not holding. showing that imbalance into the liquidity point, then imbalance out. What's an imbalance? An imbalance is just a fair value gap. That's it. So for weekly, if you want to see imbalances off of weekly time frame, you go onto 4 hour time frame. So if we go into 4 hour time frame, you can tell we have this imbalance we have these imbalances into our liquidity point or swing high. Then we can tell we have imbalances off of that. That means we are reversing. Easy peasy, eh? Nice. So let's go into a weekly time frame. Onto a weekly time frame, we can tell that we have a fair value area like here, or just an imbalance on a higher time frame. So what's the whole point of this? The whole point of this is showing that once we are retracing, once we are reversing, we have an imbalance which shows the bullish intention. Means that when this imbalance get tags, we might continue high, but also when this imbalance doesn't hold, we might continue low, just seeking liquidity off of this swing low right here. And that's it. So on a weekly time frame, I would argue we are still in a 50-50 mode. Why? Because we have an imbalance like here. This is a bullish imbalance which might hold the price to continue high. But we also have swept liquidity right there on the swing point, which shows the intention of reversing. So that means on weekly time frame we are 50-50. Is that a problem? Hell no, that's not a problem. And that's okay because the market has 3 cycles. We have bullish trending, bearish trending, oh shit, but also we have the consolidation time. So this is part of consolidation. We just call it 50-50. Having fun with the language, you know what I'm saying. So that's nice. On weekly we are 50-50, on monthly we are 50-50. What are we doing right now? We are just looking for our bias direction. That's it. So let's go down time frame on daily. And what's daily telling us? Oh, daily is nice. So same concept, right? Just going down time frame. You can tell on daily we have swept that liquidity right there on swing high. We have these imbalances in, imbalances out off of that swing point or liquidity zone. Then that shows the market is reversing, to which that's okay. Is it a problem? No, 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 no. So let's dig down onto these candles through candle science to understand what's our today's direction, and that's it. So if we look closely like here, we can tell we had an imbalance like here, which mostly people qualify to this as breakaway gaps, but also we have a fair value gap right here, to which that's okay. And if you look closely off of this fair value gap, we had through this fair value gap, that's a narrative to continue low. And this fair value gap hold price and push the price low, right? And through that fair value gap, it created we call this a context area to which we might look for entries, but that's okay. And through that fair value gap, it shows our intention of the direction or the point of interest to which there is a liquidity off of the, say, yeah, point of interest off of that zone to which we have grabbed the liquidity. In simple terms, let me not confuse you. In simple terms, you can tell this is an FEG or imbalance, that's right. But also here, oh shit, this is a liquidity target. Most people refer to these as point of interest, right? But the area between the imbalance and the liquidity target, we call it as a context. What the hell am I doing? So we call this as context. Let me give it another color. Let's say kind of black. This is called context. So within context is where we look for our entries, meaning that if we were to enter off of this day, right, we will go down time frame 1 hour, to which on 1 hour we could look for entry off of that. Let's say we take an entry off of these FEG like here, because it's a sharp turn. Fair value gap into an imbalance of daily time frame, fair value gap off of an imbalance of day time frame. We take our entry off of that, stop loss on swing high, take profit on the point of interest, and it gave us of 1.4 return. That's okay, and that's the concept of context. Context is just an area between an imbalance and the liquidity target or point of interest, to which context we look for entries. Easy peasy, and this is like what do we call recursive if you go down time frame. Yep, I just want to show you guys about that. But the main point of this is to know our direction today, where we heading and where will we look for entries. Let me get rid of this. Yep, crazy. If I zoom, right, we can tell that we had respected this fair value gap right here, or an imbalance right there, which is quite okay. And price just respected that and went down. But as always, let's use something called candle stance. So we are looking at this previous day's candle and its previous day's candle. What did it do? Its previous day's candle, the previous candle just closed below its previous day's candle. That means the current day, which is today, Friday, the anticipation is to continue low. If we're wrong about that, then that's okay. But currently, I would argue we are bearish on Friday. So if you are bearish, what's our next point of interest or target? I would argue say this swing low like there. That's it. So through this top-down analysis, we have found our bars that today we are bearish. But remember, on weekly we are 50-50, on monthly we are 50-50, on daily we are bearish. Mind you, 50-50 weekly, 50-50 monthly, you can just lower your risk. But if you want to go full margin, it's up to you. Have fun. Crazy. So we are bearish on EURUSD today. So if you are bearish, we want to build a narrative. A narrative is being built on 4-hour and 1-hour time frame before we take our entries, right? So let's go down time frame, and I'll get rid of everything just to keep the price action clean, nice, sweet. You know what I'm saying? Yep. Let's go into 4-hour time frame to see. So if we are heading downwards, if we are bearish, right? Where are we? Where do we need to go first and then go down? That's it. So if we are bearish and we have only 1 hour to go, if we are bearish, I want to see this swing high being taken out of 1 hour and then price to just push low. Because why? This is the area of liquidity. We need orders, we need buyers, we need sellers to get involved so that we can, let's say it's just part of liquidity where we get these pending orders. That's it. Yeah. Liquidity pending orders. Oh, so liquidity is how many, and volatility is how much. Oh, crazy. So volatility means that how much the price changes, and liquidity is how many orders are there. Oh, crazy. I didn't know that. Did you? Nice. Let's get it. So what I want to see is price just retrace back off of this 4-hour liquidity point and just boom going down. Else, if price doesn't go up to that, up to this liquid point, I want to go on to 1 hour. 1 hour, we just refining the liquidity areas to which price might retrace and continue low. So we can tell we have this swing high right there. We have also another swing high right there. But if we want to trace back to these liquidity areas, we must also have a target or liquidity target. So if you look closely, where's our liquidity target? We arguably our liquidity target is this swing low like there, which is quite nice. We can just name this. Bro, do I have names of this? Yeah, I can just say liquidity, and I can just say that's a target. How about just saying that's a target? Oh shit, disappears. So that's a liquidity. So what do I want to see? I have three anticipations right now. The first one, because we have, what the hell? We have 2 minutes to start our New York session. That means 8 a.m. So through that, I have a time window to which I look for entries. That time window is, what the hell? What am I drawing? Huh? That time window is arguably, let me show you something. Oh shit, what am I showing? So the time window of I to take entries is between 8 a.m. to 12 p.m. This is just the time window to which I look for entries, and it's always a morning of New York because there is where the market is quite active. Yep, that's it. So if I don't get entries or context being built along that time window, then that's it. I'm done for the day. So yep, let's get rid of that. So I have three anticipation of price, right? I would arguably say four, but four isn't much important because it hasn't been created yet. So the first anticipation is to see price going up to this swing high like here and retrace back and just target that liquidity target like there. Else another anticipation is off of this liquidity point right here and target that swing high and above the other swing high and just going down right there. And the third anticipation, to which mostly and it's not likely to be reached today, is just taking that 4 hour time frame liquidity like there and just going onto our liquidity target. So these are three anticipations to which I'm looking forward to, and I would arguably that's it. But let's say price doesn't go beyond or doesn't get attracted to these liquidity points right here and just continues going down, then I would be looking for something like this. The next candle being created should be an expansion candle followed by another, let's say another expansion candle, just another simple candle, leaving something called an imbalance right here. So I'll be looking for a price to retrace from third candle there and up to there. So this will be filling an imbalance to continue low, and that's it. That's what I'll be waiting and looking for. So if that narrative gets built on higher time frame, 4 hour or 1 hour, then I'll go on to 5 minutes and let's say 15 minutes just to look for my entries, and that's it. But arguably the fourth anticipation, I don't look much onto that. I would argue be interested on the three anticipations. So I will just mark this stuff right here. Let's say this is the first anticipation and hold control, drag, crazy, eh? This is the second, come on, come on. This is the second anticipation and hold control, drag, come on, come on, what? Yeah, okay, and this is the third anticipation, third. And this is what I want to see price doing. That's it. Beautiful. I hope I just did the simplest top-down analysis for beginners, not novice actually, these beginners who have ideas of liquidity, who have ideas about imbalances, and who have idea of kind of top-down analysis, but they're still struggling to get into that. So that's it. Ciao. See you. Bye. Ta-da. Peace out.